Bloomberg's world headquarters in New York, I'm Scarlett Fu.
And I'm Tim Stedebeck. Welcome to Bloomberg Crypto. It's a look at the people, transactions, and technology shaping the world of decentralized finance.
Here is what's at stake today. Bitcoin lower on the day as a risk-off tone hangs over the stock market, with tech leading the losses.
Plus, crypto leaders are meeting this week in Las Vegas. Perianne Boring sat down with SEC Chair Paul Atkins. Perianne joins us live in just a moment.
And Kalshi and Polymarket have come under intense criticism of late. We speak to the head of enforcement at Kalshi about the concerns around insider trading.
That's all ahead over the next hour right here on Bloomberg Crypto. First, though, we got to take a look at where things stand. If you look at Bitcoin just in the last couple of days, it actually touched a 12-week high above $78,000 before retreating ever so slightly. Traders are digesting conflicting signs about the progress of U.S.-Iran talks. But if you go back to just what we've seen so far this month, Bitcoin's up 11%. It puts it on pace for its first monthly double-digit gain going back to May of 2025. Still, that sounds great. It's slightly underperforming the S&P 500 over that same period of time. And we should remind everybody, so far this year, Scarlett, it's still down about 14%.
Now, this weekend, the organization behind President Trump's meme coin held a closed-door event in Florida where the president spoke, but his enthusiastic support for the industry failed to help his own meme coin. The Trump meme coin fell 14% on Saturday and has lost some 47% this year. From its peak, Tim, the coin is down more than 90%.
Let's talk digital asset trading and the industry with former general partner at Andreessen Horowitz, Ariana Simpson. Ariana, always good to have you on the program. I want to start with the price action that we've seen this year and really over the last few weeks as we've seen this risk-on mood hit equity markets and hit crypto markets. What are you seeing as sort of the ceiling or maybe the floor for Bitcoin for the remainder of the year?
Well, I would say it's an interesting time in the market because it feels like there's a real disconnect between the reality on the ground versus what's happening in terms of price. I think there's an incredibly friendly administration. There's a lot of adoption. Stablecoins as a group are now a $320 billion asset class. There's a lot of positive signals going on. And so it feels like there's a bit of a disconnect between what the price activity is saying versus what's actually happening. I think we are in a little bit of a holding pattern as an industry. There certainly feels like there's a lot riding on the Clarity Act, which continues to be kind of a hot topic in DC and something that the industry is very actively working on. I think hopefully if that does pass, that should unlock a lot of positive momentum for the space, but it's a little bit hard to say when exactly that's going to happen.
We see Wall Street banks now issuing Bitcoin ETFs. Morgan Stanley was first, and now Goldman Sachs is anticipated to do the same with a twist by adding income as well. Bloomberg Intelligence's Eric Balchunas says that this could broaden the allocator base. I'm wondering if A, you agree, and B, if so, what kinds of opportunities does a wider allocator base mean for crypto investments overall?
Absolutely. I definitely agree. I think we are seeing real institutional interest and adoption to an extent we've never seen before. I've long believed that if crypto was to succeed and really achieve its long-term potential, it was going to need to become closely integrated into the financial system rather than remain kind of its own little island, as it was for much of the last decade. So I think it's an extremely positive move. I think investors across the board are interested in this asset class, both in terms of investing in crypto assets themselves, as well as using stablecoins for payments, and the new move towards tokenization, which a lot of institutions that I've been in contact with have expressed interest in and are actively exploring. And so that refers to tokenizing other sorts of assets, might be stocks, might be real world assets. And there is definitely a trend on Wall Street and in the institutional market in terms of looking at that.
Right. It's not just moving towards tokenization. We also see a shift towards AI overall. I'm thinking about Mike Novogratz and his Galaxy Digital, which reported results. It was a loss for the first quarter, but it was narrower than expected because of a shift towards data centers. Galaxy has really begun converting its mining facilities into high-performance computing data centers, tapping into the AI boom, and we've seen other public miners do this as well. I'm curious whether you see this happening at the startup level, too.
Yeah, I think the intersection between crypto and AI is one of the most interesting areas right now, in my opinion. It's very much a greenfield opportunity, and I think one of the areas where startups have the most room to play, because it's a market that nobody really owns yet and is still very nascent in terms of how it's going to evolve. So I think that is absolutely something that I'm tracking closely.
I want to just shift gears a little bit and talk about opportunities that you see for venture capital, for where you're putting money right now. You had many billions of dollars at A16Z to invest. Now you're running this smaller fund. Is it a more nimble fund? Does it allow you to do deals that a much larger fund like A16Z structurally wouldn't allow you to do?
Well, I'm not ready to share much about my new fund yet, but I will tell you it is early stage focused. So I intend to continue to invest in the best entrepreneurs as early as possible, which has been kind of the focus of my career to date and what I plan to continue doing.
I know you can't share much of it right now, and like, we'll have you back when you can share more. But you have in the past warned about the rush of crypto companies getting into trading, and that would potentially stunt the industry's growth. Is it fair to say that you're sort of excluding those types of companies from investing in the future? You will not do another crypto trading platform?
No, my lens has always been focused on picking the best entrepreneurs, specifically highly technical ones, and following them wherever they choose to build. So I think there very much are opportunities in the trading and financial universe. I would say, however, that that's not going to be my exclusive focus. I think there are opportunities at the intersection of crypto and AI, like I was saying, agentic payments, stablecoins. So there's certainly a broad swath of things that I'm interested in. I think the trading and market element of crypto is extremely important. That's what really has product market fit today, and where we're seeing a huge amount of activity. So I think it would be foolish of me as an investor to kind of want to exclude those categories. The point I was making, which I think you might be referring to from my tweet, was simply that not everybody needs to be building trading infrastructure, and therefore that I wanted to see founders continue to build across a broad universe of products and services, as opposed to narrowly focusing there, which was something that at the time I was seeing a lot in the market.
Gotcha. Everyone was gravitating towards the same thing, in other words. Ariana,
Exactly.
You mentioned that you are interested in a broad swath of areas in crypto. Let's narrow that down a little bit. Which specific areas within the crypto ecosystem excite you right now?
Like I said, I think agentic payments are a really fascinating category. Obviously, the internet was designed for humans to use. And instead today, we're seeing that there's already an early shift where a lot of the entities that are taking action on the web are actually bots or agents. And this is no longer a bad thing. It's actually a very good thing and becoming a huge trend. So I think rethinking the infrastructure of payments and the web to accommodate for this new usage pattern is extremely important. Relatedly, I think there's a lot of security considerations that haven't really been, nobody's had to figure out before because the agentic commerce movement is so new, but making sure that agents can transact in a way that is secure and doesn't leave the door open to cyber attacks or other issues is critical. So we've, I've been very focused on that universe. I also think that within the AI category, obviously any startup investment, is in some way a bet against the big labs because they are obviously building a huge product surface area at this point, and there's going to be a lot of areas in which they can compete very strongly, but there may be more narrow slices of vertical applications where startups who have, for example, access to proprietary or novel data sets can compete really aggressively. So, these are all some areas that I'm thinking about. I think it's one of the most exciting and yet most challenging eras I've been around for in terms of investing. But I think we're definitely set up for a very exciting rest of the year and into next.
Well, hopefully you join us many times between the rest of the year and next year. Ariana, always good to check in with you. Ariana Simpson, thanks so much for joining us on Bloomberg Crypto. Well, coming up, Bitcoin 2026 underway in Las Vegas. The conference has drawn prominent U.S. officials. For the first time ever, a sitting SEC chair took the stage. We're going to talk to the person who talked to Chair Atkins, Perianne, founder of the Digital Chamber. And to access all the latest data and news on crypto, check out CRYP Go on the terminal. This is Bloomberg.
It is time for a political exchange where we look at the intersection of crypto and policy. Now, an interesting exchange happened Monday on stage at the Bitcoin 2026 conference in Las Vegas because Paul Atkins was the first sitting SEC chair on stage at the conference, where he shared the commission's roadmap for crypto policy in the coming months.
Partnering with the CFTC, we set out with a joint release where we interpreted what is a tokenized security. So now we're going to be moving on to do other exciting things, like to actually allow firms to experiment on-chain, build their securitized tokens and trade them on-chain here in the United States under an innovation exemption that we plan to issue here in the next few weeks, and then also to allow fundraising, through the sale of tokens on-chain.
Our next guest was right there on stage interviewing the chair, Perianne. She is founder and chair at the Digital Chamber, and she joins us now from Las Vegas. Perianne, thank you so much for speaking with us. In your conversation with Chair Atkins, what did you learn from him that has you most energized for the year ahead in terms of what the SEC can take action on?
Well, that clip that you just shared was probably the most exciting thing that he said. He alluded that we have more guidance coming out soon. The SEC chairman, Paul Atkins, they announced Project Crypto right as he joined the helm at the SEC. There's been a big effort to provide regulatory clarity to the digital asset industry, which they've done. And really the next step is helping bring the equity markets on chain. So he said in just a couple of weeks, we have another announcement coming to that end. Something we've been working very hard on for a number of years at the Digital Chamber is creating a regulatory framework and a way for businesses to register tokenized equities and put the equities industry on distributed ledger technology. So it sounds like that is coming very soon. There are so many benefits to the power of blockchain that can bring to this industry. We talked about on stage, and Chair Atkins had agreed that the innovation that we're seeing in the blockchain space can bring so many benefits to this ecosystem. Today, in the equities space, there's so many intermediaries that participate in a transaction. You have the investment advisors, you have your broker dealers, settlement can take days, even settlement that takes seconds puts risk into the system. With a blockchain, you can do that instantaneously. So there's a lot of opportunity for growth. There's a lot of opportunity for improvement in the traditional financial system. And that was a big theme of the conversation yesterday. That's a big theme of the conversation happening at Bitcoin 2026 in Las Vegas, which is moving from crypto and Bitcoin as its own asset class to integrating it into the traditional financial services
industry. Perianne, a lot of people would say there's still a long way to go, at least from a legislative perspective, and things haven't moved as quickly as many had hoped. CoinDesk reporting over the weekend that the president said the White House won't let banks ruin the crypto market structure legislation. He was referring to the Clarity Act. What does that comment mean to you?
Well, I mean, it is kind of telling, and the banks have really inserted themselves in this conversation, which of course, they're allowed to do. Every stakeholder can participate in the legislative process, but I've been a part of building the market structure bill for over 7 years. We started this process many years ago. It originated in the House Agriculture Committee, and that work that happened many, many years ago has built into today what is the Clarity Act, and the banks weren't present in that conversation back then, but here at the last minute, when we actually have a legislative pathway to get the bill done, they now have a lot of opinions. So it's there really has been an effort from the bank lobby to ensure that their own interests are represented in the legislation. Again, that's their right. They have every right to have those conversations and to advocate for themselves. But it is coming to an expense of having the President Trump successfully accomplish his mission of getting this bill done. There's been markups pulled from the bill. The pathway to get this done has become less clear. We had members of the administration speaking yesterday and spoke at a number of private events as well. We have members of Congress here from both the Senate Banking Committee and House Financial Services, and they still have a plan in place. But the clock is ticking. So there is a lot of risk here to not get it done. And
right.
there's a lot of cooks in the kitchen and a lot of people representing their own interest.
Perianne, we got to get you back on soon. We appreciate you getting up early out there in Las Vegas. That's Perianne Boring, founder and chair of the Digital Chamber.
Coming up, eToro co-founder and CEO Yoni Assia joins us as the platform enters a potential 24/7 trading world.
And earlier this week, Adam Levinson from Graticule Asset Management Asia appeared on Bloomberg discussing how the collision of TradFi and DeFi is putting a new pressure on these trading platforms.
These markets that go across TradFi and DeFi as these platforms, these alternative venues start to trade oil and gold, silver, and eventually this year you'll see it in tokenized stocks and what have you. That's going to happen, and sort of Wall Street's going to have to adapt to it, or you'll lose more and more market share to that space.
I'm Nora Melinda. Let's take a look at your midday movers. First up, U.S. stocks are under pressure, with the S&P 500 and the Nasdaq 100 nearing session lows as another sell-off in big tech's gathers steam. Concerns are building that massive investments in AI may take longer than expected to translate into meaningful returns. And that's hitting some of the biggest names: NVIDIA, CoreWeave, Oracle, all moving lower after a report that OpenAI missed both sales and user targets. That's reigniting doubts about whether the hundreds of billions of dollars being poured into AI will deliver profits anytime soon. And finally, in the crypto space, Galaxy Digital is in focus. The stock is relatively steady, but CEO Michael Novogratz is warning that a broad-based recovery in crypto could prove difficult in the current macro environment. That said, the company posted a smaller than expected first quarter loss, with revenue beating estimates, helped by a shift toward data centers in its business mix. Those are your midday movers. I'm Nora Melinda.
Let's turn now to Money Rewired, where we cover changes to markets and trading. Now, the SEC has given the green light for changes to day trading rules. Historically, small investors with less than $25,000 in their margin account have been banned from making more than 4-day trades in a 5-day period. That is about to change. A new rule will only require traders to have enough equity to cover risks given at any given time. Meanwhile, retail traders are getting more access than ever to markets. One marketplace at the center of these changes is eToro. Co-founder and CEO Yoni Assia joins us now. And this really goes to the idea, Yoni, of what your company is doing. You're buying a crypto wallet provider, Zengo, for $70 million in mostly cash. So let's just start there. What does buying Zengo allow eToro to do that you couldn't previously?
So eToro entered crypto very early. We were the first regulated crypto company in Europe to introduce Bitcoin trading. And we came from securities trading. So on eToro, you can trade stocks alongside commodities and crypto assets. But as coming from the traditional finance world and the regulated finance world, we weren't a deep dive into DeFi. What's great about the opportunity with eToro and Zengo together, Zengo is a non-custodial wallet which targets DeFi native customers, people who want to basically own their own coins with their own keys and access DeFi markets such as swaps, yield, lending, as well as soon prediction markets and perpetuals were applicable. So with Zengo together, we cover both all of the innovation in crypto in traditional finance, as well as all of the innovation in crypto in the decentralized finance, the DeFi space.
Why was this the right acquisition to make? eToro generated 95% of its 2025 revenue from crypto-related businesses. Are you doubling down here? Is there concentration risk as a result?
So if you look at basically net contribution, you'll see that crypto is about 25% of 2025. So you're looking at volumes of crypto versus the net contribution or net revenues of crypto on the platform. So actually, our business is much less concentrated on crypto than it seems. Secondly, what we've seen in previous cycles, and this is our fourth cycle, we've seen crypto, Bitcoin in 2013 I launched it in, I think it was $1,200, and then Mt. Gox collapsed in 2017 all-time high, then 2021, and now this existing market. And what we found out that it's a great opportunity to actually focus on building new products and integrating new products into the platform. In Q4, what we saw for the first time is actually crypto native customers who came into eToro to trade crypto, actually trading on the eToro platform, oil and gold and silver, so commodities on the eToro platform, which is part of the unique part of eToro where you can actually trade all assets and also see what other people are doing and copying them.
So let's talk a little bit more about that. Crypto infrastructure is definitely pulling capital markets closer to continuous nonstop 24/7 trading. And we see that with certainly 24-hour trading in things like gold and oil. What does that mean for more traditional assets, things outside the purview of fixed income and commodities?
So we are actually announcing today that globally outside the US, we launched 24/7 trading now on single stocks alongside also commodities such as gold and oil. And what we're seeing is actually a convergence, again, coming to eToro and Zen go together, a convergence between the decentralized finance world and the traditional finance world. And in DeFi, everything that trades by default trades 24/7. And through the tokenization of assets, which I believe we're in a very early stage of actually most assets becoming digital, or the tokenization of all assets eventually, more what the SEC chair says, moving US capital markets on chain. When assets are on chain, they trade 24/7 and they're transferable 24/7. And I think this is the year of a significant growth in tokenized assets, which include equities, which include commodities, which will include many more assets like private equity and real estate, as well as we're seeing right now in the markets. And that means more opportunities for retail investors, including trading over the weekend.
eToro CEO, Yoni, Assia. Yoni, always good to see you. Thanks so much for joining us on Bloomberg Crypto. Well, coming up next, Wall Street may be ready to pause bets on prediction markets thanks to some headlines raising concerns about insider trading. Robert DeNault, head of enforcement at Kalshi, joins us next to discuss. This is Bloomberg.
Welcome back to Bloomberg Crypto. I'm Scarlett Fu alongside Tim Stenovec.
Well, let's get to the odds. It's an in-depth look at the booming growth of prediction markets. Multiple headlines stoking insider trading concerns in the sector. On Thursday, the DOJ charged a U.S. soldier for betting on the capture of Nicolas Maduro after learning classified information and making more than $400,000 on the trade. President Trump shared his disapproval, lamenting prediction markets.
It's a little like Pete Rose. Pete Rose, they kept him out of the Hall of Fame because he bet on his own team. The whole world, unfortunately, has become somewhat of a casino. And you look at what's going on all over the world, in Europe and every place they're doing these betting things. I was never much in favor of it. I don't like it conceptually, but it is what it is. No, I think that I'm not happy with any of that stuff.
Robert DeNault joins us now. He's head of enforcement at Kalshi, and it's his first interview. Bobby, good to have you on the program. I want to start with the CFTC and Justice Department accusing a U.S. soldier with using classified information to make more than $400,000 on Polymarket's international exchange. How does Kalshi police that type of activity, so-called insider trading, on its platform?
So Kalshi is a regulated prediction market. So we are registered with the CFTC.
That's the first distinction between the international
Very big distinction.
Polymarket.
Very big distinction. So the CFTC has a number of regulations that apply to regulated prediction markets, including a requirement that we surveil all transaction activity on the platform. So we have surveillance systems that monitor all of our markets, and they have thresholds that are curated for insider trading, market manipulation, wash trading, similar types of activity that you see on other exchanges.
So would it be fair to say that that trade would not have happened on Kalshi's platform?
I don't think that's fair to say. That's never the standard that we apply to platforms. There's illicit activity that happens on all kinds of exchanges, on the New York Stock Exchange, on NASDAQ, and on prediction markets. It would be flagged, detected, investigated, and if we found evidence of actual illicit wrongdoing, we would refer it to the Justice Department and the CFTC.
So can you share with us what it is that you do, what kind of surveillance Kalshi does?
Yeah, absolutely. So we have an internal surveillance system that we've built that's curated for prediction markets specifically, but we also have partners that help us in the space. So we've partnered with Solidus Labs, which has a background in cross-product monitoring and surveillance in crypto, and they're developing prediction market-specific solutions. We've partnered with them to layer on top of our own internal surveillance systems. And we also partner with integrity monitoring services. So we use IC360, for example, for sports-specific monitoring, and we're expanding that partnership in other directions too.
Is there a specific red line that warrants action that prompts you to go all in?
I think this is where the leverage between tech surveillance and AI tools and human touch sort of comes in. We get a lot of flags, and we're able to use AI and other tools to prioritize certain alerts. But we still rely on an investigative team of human analysts that look at every case and question traders, collect documents, and then make determinations based on what the evidence is in a particular
How
case.
big is that team right now?
It's growing. It's growing fast. Kalshi has exploded in volume in the last year. So we're putting a lot of resources in our surveillance and detection, and our external vendors help us a lot in this space too.
We saw the news, Bobby, last week related to 3 enforcement investigations. They were all involved people betting on things they were personally involved in. Where do you draw the line when it comes to what's insider information? So in other words, like who can and who can't make a prediction in a certain market?
So there's a nice layer in the regulated exchange framework that the CFTC oversees. So exchanges have their rules, and those rules can police certain activity that might be unique to the platform. So on Kalshi, we have unique insider rules that prohibit people trading with material non-public information, but also people who can influence outcomes of contracts. And then, of course, in terms of cases that we escalate, we hew closer to federal law. Right? We're not going to flag for the CFTC something that might be against the Kalshi rules, but not against the actual federal regulations or federal law. So we try to hew closely to the federal rules as they apply, but there are these unique products that we offer that Kalshi's exchange rules acts as like a sort of front layer of enforcement on the platform.
So, you can make the argument that insider trading happens across all financial markets. We've certainly seen it in traditional markets like the stock market, for instance, and we've seen it in sports books as well. Prediction markets clearly aren't immune, but I'm curious as to whether they're more susceptible to it than other markets.
I don't think they are more susceptible. I think that it's true that the array of products is wider, but the depth of insider information is actually a bit tighter. An event contract is a product that's distilled to one very unique question. And so the scope of information that's actually material to that question is narrower than all the information that might be material to a stock or a commodities future.
Just to follow up on Scarlett, you have this post out on LinkedIn today. It says that insider trading happens in all financial markets just because the use of information, these are your words, just because the use of information on prediction markets looks different doesn't necessarily mean it's any more susceptible to insider trading. I think critics would point out that there's a difference between prediction markets and other exchanges. The culprits are clearly defined when it comes to these other exchanges. So they're corporate officers, directors, employees. On Kalshi, insider could be a lot of people. It could be a producer who knows who a certain guest could be on a show, a soldier with classified information, an athlete. How do you police a market where you can't define who the insiders are and, like you said, with a limited but growing team?
So I think that you start with where the federal rules exist, right? So we can overlay those on the clean cases where you have some sort of duty of confidentiality. You're a corporate insider, or you're a fiduciary, or you're misappropriating information, taking something that you got access to and aren't supposed to use for personal gain. That's sort of the federal framework that exists now.
And that's where you'd see it happen with public markets, with executives at companies.
That's right. But I also think that Americans have shown themselves to be quite dissatisfied with the limitations of that approach. And so at Kalshi, our exchange rule framework is a bit broader than that. And I think overlaying that rule framework onto the products that we offer is helpful guidance for our regulators and for legislators who are considering, potential rules that govern these different types of products. I think the federal rules in insider trading are helpful, but we've seen the limits of their enforceability on securities markets. And so it takes sometimes new products to emerge in regulated spaces to think about the way the rules are working and where they might fall short. And that's what we're trying to do.
You said you have a small but rapidly growing team. I wonder whether you just need a bigger enforcement team, or do you rely on tech to do a lot more of that for you?
The tech the advancements in tech have helped us significantly. And I actually think being new and building these things from scratch in our exchange has existed for the last 8 years or so. Building things from scratch in this time frame has been a lot nicer than, say, being an exchange that has surveillance systems dating all the way back to the 80s. So we are able to leverage tools a little quicker and build solutions a little faster. Ultimately, what we're doing is solving for what a lot of people see as the hardest use case on insider trading. And as we grow the product into sometimes more traditional types of event contracts, I think it's actually going to be easier for us to overlay the product we're building onto more traditional types of insider trading frameworks.
Does a lack of case law around this versus traditional insider trading make your job more difficult?
I don't think so. I mean, you can tell when people are utilizing unfair access to information to cheat. I think at the core of insider questions, that's always the driving force. Is there unfair information asymmetry? And that's sort of the guidepost that we're using as we think about insider trading on Kalshi. I also don't think that a lack of case law should ever inhibit us from, launching new regulated products. That's how we make more case law and develop smarter rules around insider trading that might end up overlaying back on securities and other traditional markets.
What kind of interaction do you have with traditional law enforcement? How active are they in referring things to you? Or pointing things out?
I would say we refer a lot of things to them. And we've gotten questions from them as well. It's a very regular feedback. I speak with the enforcement division at the CFTC on a regular basis, and DOJ where appropriate. So, there's an open dialogue, as there is with, many financial exchanges in the United States that do regulation, and, banks and other regulated institutions as well.
We're going to hear from Fed Chair Jay Powell tomorrow. There was a funny moment a few weeks ago when he was at Harvard, and he was asked, what are you going to say? And it was clearly a reference to
Are you going to say good afternoon?
Yeah, you're going to say good afternoon. It was clearly a reference to a mentioned market. It does seem like these mentioned markets are particularly susceptible to insider trading. Do you have an obligation under the Commodity Exchange Act not to list contracts that are susceptible to manipulation?
I think it's important for a regulator to make that analysis. That's not the analysis the CFTC has made. We monitor mentioned markets the same, way at a high level that we do for other markets, but we also look for specific behavioral patterns that are unique to mentioned markets. So, it might take a different shape than another event contract, but we're still able to detect anomalous activity in a way that might be unique to mentioned markets.
Can you share with us any sort of information about, ways you've been able to prevent insider trading or potential insider trading? Because everything that we've seen is reactive in the sense of, okay, this person was fined, this person was banned from the platform. Do you prevent trades from actually happening if they're flagged?
A headline that didn't happen.
Exactly,
right. Yeah, so a few months ago, we announced that we were implementing some new engineering solutions that would block candidates preemptively from trading on themselves. The cases that were announced last week and other cases that were flagged were part of that solution being implemented. We also preemptively block athletes from trading in their own sport and league that they are flagged from our partner IC360 or internal lists. And I think that is a model that can be followed in more traditional markets as well. It's not something that you see in the stock market, but it is something that with more effective list sharing could be easily accomplished.
So does that grow in the future? More people being restricted from doing certain things on the platform?
To me, it's the name of the game. If you can get information sharing, and we saw the CFTC announce an effort for MOUs between sports leagues and prediction markets, I think that could apply across a panoply of markets and have financial institutions sharing information so that we're not chasing bad activity. We can't leave it to the regulators to run after, the explosion of trading volume that we live with in the 21st century. It's great to put in these preemptive solutions. We certainly think we're leading the way on that effort.
All right, Robert, really a pleasure to have you with us, Bobby. Thank you so much.
Yeah.
Robert DeNault, or Bobby DeNault of Kalshi. He heads up enforcement at the prediction market.
Coming up next, crypto markets still recovering from a major hack, prompting calls for a rescue effort in the sector. That's next. This is Bloomberg.
We're just about halfway through the trading day in New York. I'm Nora Melinda. Let's take a look at your midday movers. First up, U.S. stocks are under pressure, with the S&P 500 and the tech-heavy NASDAQ 100 near session lows, as another sell-off in big tech picks up steam. Concerns are mounting over whether massive AI investments will deliver the returns investors are expecting. That comes as OpenAI reportedly missed several sales targets. And meanwhile, in oil, Brent is trading above $110 a barrel as traders wait for Washington's response to a proposal from Tehran to end the war. At the same time, the UAE has announced a surprise exit from OPEC Plus effective this Friday, a move traders see as positioning the country to ramp up output more freely once tensions ease. In company news, Corning shares are moving lower after the company issued a second quarter core earnings outlook that was slightly weaker than expected at the midpoint of the range. First quarter results were largely in line, but guidance is what's weighing on the stock, raising questions about whether the recent run-up in the stock was justified. And finally, Coca-Cola shares are higher after the company reported organic revenue growth of 10%, beating analysts' expectations and marking its strongest growth in 5 quarters. The results suggest its strategy of offering drinks at a range of price points is gaining traction, with strong demand for smaller format cans and a new premium offering rolling out in the UK. Those are your midday movers. I'm Nora Melinda.
A group of allied crypto projects working to restore liquidity to Aave following last week's $300 million hack at KelpDAO, which triggered a $10 billion run on the lending platform. It's the largest coordinated rescue effort in decentralized finance history. Bloomberg's senior crypto editor, Ariana, joins us here in New York right now. What happened?
So let's take a step back,
Please.
right? Because some of these names might be unfamiliar for viewers or for me and you. Last week, I believe, or the week before, there was a giant hack of a DeFi protocol. It was the biggest crypto hack this year. It was 240 million. What was peculiar, we know that crypto hacks are very frequent. What was peculiar this time was that the hackers took what they'd stolen and put it on a DeFi protocol. DeFi protocols are essentially financial systems that run on their own. And the biggest one on lending is called Aave. So they put the stolen money there as collateral to borrow more money, which meant people that were on that ecosystem thought, maybe the collateral is not going to be that good collateral if it's stolen. So then people started taking away their money from the other protocol, right? Which meant Aave had a drop in the money on it that was around 10 billion. And I think it was 26 billion before the hack. So that meant people had to go in and try to essentially kind of save Aave, put money back in so that people felt confident enough to use it again.
Who leads a rescue effort in a decentralized world?
That's part of the question, right? Like, if people are rescuing it, is it really decentralized? And on these platforms, you get high returns because of the risk, right? So if someone's going to bail you out, then it's a bit messed up, right? Should they step in? I think it was people in the industry. We saw the founder as well say, we're going to help. I mean, it's not the protocol's fault that the hacker came in and used, but it's still part of the system, right? Like, in a way, people are wondering, are you kind of gaming it? If people just come in and bail you out, then is it really decentralized?
What I always wonder when I see headlines like this, even if they're with services that might not be familiar to a large audience, is what it does for the way that people think about the concept of cryptocurrency. Or not even just investing in it, but the idea of, and Scarlett talks about this all the time, of DeFi sort of making its way over into traditional finance. Is it a sign that it's parts of this are not just ready for prime time?
Partly, yes, but it's also interesting because I've been having chats over the past few weeks because I'm also very interested in hearing about the intersection and the convergence of traditional finance and crypto. And there's a lot of interest in DeFi from asset managers and real big players who see it as an interesting way, an efficient way, or to get more capital, because essentially you're sourcing money and pools of money to invest, like borrow, lend, etc. So it is perhaps always a reality check to show that you are in an online world where hacks happen and you can't control everything.
Is there any evidence that this has discouraged anyone from participating fully in DeFi?
I'm not sure yet, because I don't know that many have come out and said openly that they were thinking of it, but that's an interesting thing to ask for sure. And as we follow up, were you looking at it? Are you now not looking at it anymore? How do you approach it?
Absolutely. All right, Ariana will be on top of all of that for us.
You should come here every week.
Yes,
for
just
our
fly
show.
in.
Just
yes,
fly
for
in.
sure. Yeah.
Normally based in London, but today joining us here in New York, and we welcome her presence more frequently. All right, coming up next on Bloomberg Crypto. Crypto lobbyists have $180 million on hand to use for the midterm elections. We've got the details next. This is Bloomberg Crypto. Welcome back to Bloomberg Crypto. I'm Scarlett Fu alongside Tim Stenovic. Now, political groups tied to the crypto industry are sitting on an almost $180 million war chest. This all before this year's midterm elections in November. Bloomberg's Bill Allison follows the campaign money for Bloomberg News, and he joins us now from our Washington office. Bill, 180 million sounds like a lot, but put that into context for us. How does that compare to other super PACs?
Well, it's one of the biggest pots of money sitting out there right now, ahead of the midterms. If you look at the big Republican super PACs, the ones that are tied to congressional leadership, that are going to be spending tons of money in places like the Maine Senate race and elsewhere, they're sitting on about 168 million, the Senate side, and on the House side is about 91 million. So. The crypto super PACs really have a huge amount of money heading into the elections.
They were really powerful in the presidential election in the sense of like that being, not an off-year election, but in 2024 election. Senate in Ohio, I recall them being incredibly powerful with unseating Sherrod Brown and getting Bernie Moreno in there. Bill, what does it mean for candidates in 2026 and their messaging? Did candidates essentially learn a lesson in 2024? At this point, do they have to be pro-crypto or they will get challenged?
There's definitely a sense that the crypto super PACs, the Sherrod Brown race really did make an impact. They've spent a lot of money, and you may remember the California primary, gubernatorial primary when the California Senate primary when Katie Porter was running against Adam Schiff. So members of Congress are, people talk about this, and they kind of know that this money is out there. That being said, though, there are members of Congress who continue to take, in the Elizabeth Warren wing of the party and others, who take a really strong view of trying to regulate crypto more.
We were showing a graphic earlier that attributed a lot of that money to Fairshake. It's one of the political action committees out there. What is Fairshake? Who is behind it? Who's involved in it?
Well, Fairshake is a really interesting, and it's almost a throwback to the old days when agribusinesses would give tons of money to both parties because they wanted a good farm bill to be passed. And what Fairshake does is it gives to both Democrats, or it supports both Democrats and Republicans. It plays heavily in primaries, so it is trying to influence. In a lot of places, the country is there's so many safe seats in the House and the Senate that the only place to make a change are primaries. And so what it tries to do is elect the most crypto-friendly candidate it can, or to block candidates who are very anti-crypto.
What about Fellowship and what Fellowship is doing? Fairshake gets a lot of the attention, but what can you tell us about Fellowship?
Fellowship is a new organization. It's they say that they have I think $100 million that they have committed to them to spend in the election, and it's funded by Cantor Fitzgerald, which, as you know, is very much involved in Tether, which is an offshore crypto platform, although they do have a U.S. subsidiary now. And it started to spend, and it's spending only in Republican primaries and backing Republican candidates. And if you remember, of course, Cantor Fitzgerald is the former firm of Commerce Secretary Howard Lutnick. His sons are running it. And it's really kind of, its aim is to back the Trump administration's policies on crypto and by electing candidates friendly to it.
Yeah, makes sense. And thank you for clarifying that. Very quickly here, how much overlap is there between the crypto PACs and the AI PACs?
Well, they're using the same strategy. There's some of the same personnel involved and with the AI PACs. But what's, I think, different is that whereas crypto, there's no kind of anti-crypto super PAC or like, the Tether has its super PAC and it's opposed to a super PAC owned by, I don't know, Coinbase. In the world of AI, though, there's such a split in how they view regulation and how they view, the ideal situation that you have AI super PACs spending against each other. But what we see is, in terms of the overlap between crypto, there are some donors who give to both.
Bill Allison joining us from Washington, D.C. His story and the team story must read on the Bloomberg terminal.
And that does it for Bloomberg Crypto. Be sure to join us again next week, same time, same place.